Hi, this is Dan Collins coming to you live from Traders Expo New York. Joining me is Toni Hansen from ToniHansen.com.
Hello.
We were talking about indicators and how Toni doesn't use a lot of indicators for her momentum trading. And that got us into a discussion that a lot of people can really just freeze themselves by what's called paralysis by analysis, by putting like 8 indicators, one indicator on the other. They cancel each other out and they never get a trade.
I know, I see some people's charts and I'm like, how do you even see the price action underneath all those indicators? And they're like, oh, well, I'm waiting for XYZ to cross XYZ, and then when that happens, and then this happens, and then this happens. And I'm like, okay.
and you're not against indicators. They're very helpful.
Right.
It's very helpful to have 1 or 2 that you look at and another maybe 1 or 2 that you use as confirmation.
Right. When they're an additional confirmation tool of what the underlying price action is, that's when I recommend using indicators. So they're usually simple things that most people follow, like moving averages or Fibonacci levels. I'm really fond of Fibonacci. The thing that I like about that is that even if you draw it as a way that other people might not have drawn it, there's so much synchronicity between the levels that the way one person drew it, you might have a 61.8%. And then somebody else, it might be at the 76.4, but they're really close together. And so you can draw them based upon things that happened way in the past, and they'll continue to be relevant as long as you're seeing reactions off of those levels.
Yeah, and none of these are the holy grail. So you're just looking for an edge and a consistent edge. And once you find that, you can look to improve, but don't keep on piling one after the other because you're going to freeze yourself up.
Well, right. I mean, if you look at somebody that draws portraits for a living, you know, they will break a person's face down into different segments, you know, and you have like the proportional relativity in the face, and that's a lot how the market is too, is you can break it down into different proportions, and Fibonacci really helps do that. And then of course we talked about volume can be a great additional confirmation tool, and then moving averages. I mean, those 3 are probably my favorite ones, especially for a newer trader, somebody wanting to build their confidence in trading, but without getting completely overwhelmed.
Yeah, pick out the 3 or 4 best ones.
Yes.
And none of them are the holy grail.
No.
There's not a holy grail, so don't look for one.